Welcome to Senior Moments. I'm Dolly Simonovich. You may have been watching television, as I have for the last couple years, and seen commercials regarding something called reverse mortgages. And of course, it just brings up questions. What is a reverse mortgage? Well, my producer and I were curious about it. So we brought someone in who may be able to answer our questions for us. In fact, I'm pretty sure she can. I'd like to introduce you today to my guest, Dominique Stevens. Dominique, welcome to our show.
Thank you so much, Dolly. Thank you for having me. I'm really looking forward to chatting with you.
Oh, I'm looking forward to it too. There's so much information regarding reverse mortgages. Can you tell us exactly what you do?
So I am a senior loan officer, and I'm a managing broker of the brokerage Mayfair Mortgage Advisors. What we do is we do a whole range of mortgages all over California to help people purchase homes and to refinance their homes. And then over the years, I've become a bit of a reverse mortgage expert in the field. And I really enjoy doing these mortgages to help people out in their senior years.
So you can handle conventional loans also?
Yes, ma'am, we can.
Can someone who handles conventional loans, can they handle reverse mortgages?
Absolutely. If they have the training and the skills and the access to the banks that do reverse mortgages.
They need special training. So they need special training for the reverse mortgage?
I would think, well, they need some years of experience doing it, and they gain that by doing the reverse mortgages. But there is no like certification requirement to do a reverse mortgage if you're a loan officer.
Can you define reverse mortgage for us briefly?
Sure. So a reverse mortgage is a mortgage in reverse. And in our world, we call forward mortgages just regular mortgages where you make your mortgage payment every month. A reverse mortgage is when a lender, with approval, if the client is approved, will pay off your mortgage, and then you no longer have to make mortgage payments. So the mortgage is in reverse. So the interest rate, the interest that is due to the lender every month is accrued. So the balance grows over time.
You get a reverse mortgage and have it amortized over a period of time and just pay it off if you can?
You can. So with a reverse mortgage, you can actually make payments towards your mortgage if you decide every month if you want, or some months. So you can make payments on your mortgage and then the interest doesn't accrue. So when someone is approved for a reverse mortgage, they're shown an amortization schedule. And an amortization schedule will show them every year of their life till they reach 100. And it will show them, because they're not making payments on the mortgage, the interest in a column that accrues every year. And then they'll show another column that shows the house as it appreciates. And in California, these houses are appreciating, it's crazy. So they'll show them a column every year of their life till they reach 100, how much the house is valued at.
How much do they raise the value of the house per year?
So the amortization schedule software that we use shows appreciation annually of 4%.
Mm-hmm.
So that is a very modest amount in California. So, I mean, we're looking at 10% often in California, especially Northern California.
Yes.
So it's a very modest appreciation schedule. And then in the final column, it shows how much equity they have to leave their heirs or whoever they want to leave their equity to.
They can have it amortized. You will amortize it for them. And if they want to, they can pay every single month and treat it as a conventional mortgage.
They can. They have that option. They have the option to either pay if they want. And then if they want to take a mortgage holiday, as some people call it, and not pay, then just that interest that they didn't pay just accrues on the balance of the loan.
So it's very flexible.
It is. It's very flexible in that way. And honestly, you know, a lot of the clients that we work with here in the Bay Area, it's so expensive to live here, and they get to be in their 70s and they're carrying a balance of 500, 600,000. That's a lot of money when you're on a fixed income. So to have that option to not have to pay that balance every month and not have to keep working, and they have all this equity. I mean, we have a couple in San Mateo right now we're working with. Their house just approved for $3.7 million. You know, and they don't owe very much. They owe like 500,000. So, you know, they have so much equity. It kind of behooves them not to look into using their finances in a way that's going to make them more comfortable in their senior years.
So if you start a reverse mortgage at age 75, you've got a 25-year amortization program.
To look at, just so it helps you determine, is this a good decision for me financially?
It sounds as though you can fix the mortgage to anybody's needs.
Well, they still have to qualify. So they have to be of a certain age. They have to be 62 years or older.
Yes.
They have to have enough equity in the home to show that 30 years from now, you know, they'll still have enough equity for the lender to be able to exit out of that loan. Oh, now you're freezing up.
Both husband and wife have to sign on the loan. I'm sorry, say that again.
Oh, you were freezing up. Both need to sign on the loan to protect both spouses. So if one dies, that triggers an event, and then you really want your spouse to be on the loan to protect that spouse.
Otherwise,
so that they can be there for the rest of their lives.
Okay. Otherwise,
and that's
they'd have to pay off the loan.
Exactly. They have to sell the house, or they have to come up with enough money to pay off the loan. So I think that's where in the past you'd see these news stories where you'd see, it's usually the wife on the steps of their house crying and, you know, blah, blah, blah. I've been evicted from my house. Well, you know, the loan comes due if the only borrower on the loan has passed away. So I think that's where a lot of that confusion came from. Now, the thing we didn't talk about is not only do most of my clients get their mortgage paid off. So let's say the reverse mortgage lender they have to borrow money on the market, right? They have to borrow money to pay off. Let's say you have a loan with Chase and you owe 500,000. So the reverse mortgage lender has to pay off Chase $500,000. And they know that they're going to wait for 30 years or more to get paid back. So not only are you not making mortgage payments, but a lot of my clients are getting what's called cash out. So they're getting a lump sum of $200,000, $300,000, $400,000 into their bank account. And they can use those funds however they want. They can use it for home care, fixing up the house, and it's non-taxable. It's not income, so it's not taxed. So not only do you pay off your mortgage, but you can get cash out if you qualify.
Can you pay off the mortgage and have like a home equity so that you can
Yes.
draw on it?
Yes, and that's the next thing I was going to talk about. The most recent change in the reverse mortgage world is the lines of credit. So let's say you qualify for a $175,000 line of credit. It sits in an account and you write yourself checks as much as you want, and it only starts accruing interest on the portion that you write yourself a check for.
Okay, I'm talking about what if you pay off somebody's mortgage and then you still want another 100,000 to draw on? Can you do that, or do you have to take it all out on a lump sum?
No, you can have a lump sum and a line of credit, or just a line of credit that sits in an account.
So you have the choice. That you have the choice between. Oh wow, this sounds really good to me. And I was kind of skeptical when I first started asking about it.
It's a big decision. and anyone would be skeptical and should be. You need to do your due diligence. Like, where do you want to be in your life? Let's say you've had your reverse mortgage for 10 years. You're happy, you're comfortable. You decide to move to Florida to be near your kids. Basically, all you have to do is sell your house, because you do need to maintain it as your primary residence with a reverse mortgage. You can't turn it into a rental. But let's say you decide you want to be in Florida near your kids. You sell the house, whatever balance is due to the lender, you pay them off just like your current mortgage now. You got to pay that one off, right? You pay off the reverse lender. You move to whatever equity's left, that's yours. It's yours. So it's not like, I think the biggest misconception is people think the banks have some kind of equity stake in your house, and they don't. It's your house and it's your equity. You just have to pay off the loan like any loan. So you pay it off and you go on your way.
As people at home can tell, we are on Zoom.
Right.
We're not meeting face to face, as you can see. So we're freezing up every once in a while. So let's take a break and see if we can fix some of these problems.
Garbage day tomorrow? Wait a minute, that's not where the totes go. Place your bins at the end of your driveway, not blocking the sidewalk, with the lid opening pointed towards the street. If space allows, place the bins 2 to 3 feet apart, all facing the same direction. Keep the sidewalks open and passable for walkers, people pushing baby strollers, and the disabled. And remember, once emptied, totes must be stored out of sight from the street.
My uncle, Freddie Lee Tyson, was a part of the syphilis study. He was such a wonderful man, a very loving, very caring, very jovial person. He helped build the air base at Moulton Field. When you think about the Tuskegee Airmen, all of the greatness that they did, and then in this same space, such an atrocious study was being heaped upon our men, that really shook my spirit. They were not being treated. That is very different from what's happening with COVID-19. The vaccine is being made available to anyone who wants it, even those who find themselves at the space of hesitancy. We have to have patience and give them the requisite information that they need, that they can make an informed decision. But let's do it out of love.
Welcome back. I'm sitting here with Dominique Stevens discussing reverse mortgages. And we were just about to discuss something about eligibility. What does it take to get a loan? Do you have to have a good credit score? What's going on with that?
So with reverse mortgages, they're not based on how much you make, your credit scores, like a forward mortgage. The reverse mortgages eligibility is based on 3 items. the age of the youngest, if there's a partnership or spouse, the age of the youngest, how much you currently owe on your mortgage, and how much the house is worth. There has to be enough equity. The lenders, and they have all kinds of amortization schedules and software that we use to determine that there's enough equity in the home for the mortgage to last till the youngest person reaches 100 years old. I know. But as I had a manager tell me once, they can be 120. The reverse mortgage is still going to stay in place till whoever they all both pass or leave the home, as they say. I mean, they could go into a care home. The homeowner is required to maintain the property as their primary residence. They're also required to maintain the property taxes and the homeowner's insurance. If that lapses, that's a triggering event. So they do need to be mindful that they can afford those fees. And they have to keep the home in a habitable, safe condition. You know, like there's no holes in the ceiling or, you know, holes in the floor or appliances that don't work. So I'm kind of going off topic, but that is a requirement for all reverse mortgages.
If they move into a care home, there has to be at least one person still living in the home, is that correct?
So they have to maintain the property as their primary residence. And if one goes into a care home, that's fine. But if they both go in, then that triggers the need to sell the home or refinance out of a reverse mortgage, basically.
So the children can refinance it as a rental property and pay off the reverse mortgage.
When the owners of the home leave the property permanently, the heirs receive the property in two ways. They have options. They can either come up with a loan to pay off the current balance and keep the home in the family, or they can sell the home and pay off the loan, and whatever proceeds are left, that's their legacy. Those are their funds.
Okay, what if the house is in a trust?
That's fine. Trust has nothing to do with it. The house is in a trust. Most people in California who have a home put it in a trust, and if they don't, they should.
If they have it in their own name now and they get a reverse mortgage, can they change it into a trust without any problems?
Easily, yes.
What age do you say most of your properties, most people get a reverse mortgage? At what age?
It's anywhere the gamut, 60s, 70s, 80s, and even 90s.
Really?
I have a client who we helped him get his reverse mortgage at the age of 95. And he used to keep a little piece of paper in his pocket that he showed me, pulled it out when we met, and he had listed his cousins and his brothers and the ages that they lived to. He said, here, they lived to 105. This one lived to 100. It was so cute. I was like, oh my God, that's so sweet.
He's good for the rest of his life.
I love it. It was really nice.
So in some aspect, the lending institution is taking a chance, almost like life insurance, taking a
Absolutely.
chance that they could end up paying more out to you than the house will.
Absolutely. I mean, knowing full well that these institutions have actuarials in an office who are crunching numbers so that doesn't happen, because they can't stay in business. But everybody has to remember, they have to borrow the money to pay off your, let's say, Chase mortgage, $500,000. They have to borrow that money and they have to make payments on it every month, right? But they're not receiving any income against it.
Yes.
So when they finally get paid back, it can be many, many, many years.
Yes, but with conventional loans, it seems to me that you pay your more interest in the beginning, and then at the end, you're paying off the loan.
Right. You start paying the principal down more. So the interest payment is higher in the beginning and the principal is lower. And that's how they make their money on forward mortgages, because they're borrowing, the lender is borrowing their money on the open market.
Mhm.
And then they're charging you a slightly higher interest rate, and that's the difference, how they make their
Mhm.
revenue to pay their bills.
So when you have a reverse mortgage, do you get anything, an annual report for your taxes on a reverse mortgage?
Oh, yeah, you get a monthly report. So you get a monthly mortgage statement
Uh-huh.
that shows your balance, shows you if you have a line of credit, how much is still in that line of credit. It shows the interest rate. It shows how much interest has been deferred year to date. And then you get an annual statement, just like you do for your mortgage statement. But it's not a tax write-off because you're not making payments.
Okay, but if you are making payments as you would with a conventional mortgage, then you would get a statement at the end of the year and sent to the government that says this is how much you paid in.
Exactly, same. Yeah, they have to record that. It's federal law. Yeah.
Most people are taught to pay off their bills. So even if they get a reverse mortgage, they may want to pay off their mortgage in 10 years, 20 years, 30 years. But what I was thinking is, if somebody took the mortgage out at age 75, then it's a 25-year mortgage schedule, or it's a 25-year mortgage.
It's not a 25-year mortgage. It's an open-ended mortgage.
Yes.
It's open-ended until both of a couple, or if it's a single person, depart the property.
Mm-hmm.
It's open-ended, but the amortization schedule only shows up to 100 because really, how many people live to 100? Not that many.
No. It's hard sometimes to imagine it when you're so used to paying off your bills instead of just letting them go.
Right. And if you saw the amortization schedule, we'd go through it as visual and you can go like, oh, I get that. I get it. It makes sense. It puts it into a picture, your whole life and the monies.
So there are no surprises.
Right. So you can make an informed decision, and you'll go over that with the counseling company, the HUD counselor as well, to make sure that that completely makes sense to you.
Well, I'm beginning to wonder why people don't just get reverse mortgages all the time, because there's such a flexibility in them.
I think some people feel like they should live within their means and that they should be able to live on the retirement, the Social Security, and the pensions they have. But California is just so expensive, and these houses are so high value that, once they take a look at the numbers, they go, why are we struggling? It's expensive to get, new tires for your car or dental work done. It's not cheap.
Mm-hmm.
And so, yeah, no, I mean, it's becoming more and more popular, put it that way.
Dominique, what are the fees that are involved in reverse mortgages? Are they comparable to conventional loans?
So the fees in a reverse mortgage are, for some programs, there's an origination fee. For some programs, there's no origination fee. They will be required to have an appraisal done. They'll pay for their appraisal. Then there's title and escrow fees, which is on every mortgage.
Yes.
And then there's title insurance. Now, the title insurance can be more expensive because they're insuring that house all the way to the amount of when they become 100 years old. So let's say somebody owes $500,000 and the house is worth $1 million, and the title insurance would be required to insure the property up to, like, let's say $2.3 million. So that fee can be a little expensive, but that is rolled into the cost of the loan. It's not what you call out of pocket. The out of pocket expenses are the appraisal fee.
You find that wealthy people use reverse mortgage?
Oh, I have a fair amount of very wealthy people who use the program. I mean, some are pretty fabulously wealthy. And they do it to preserve their legacy assets for whoever their legacy is going to go to. It may be their children, may not be their children. It could be, their legacy could go to the Humane Society. they use the reverse mortgage to, because they're pretty savvy with money. They use the reverse mortgage to just lower their monthly expenses and not pull on their assets.
And I suppose they can use the money too to invest in other things too if they wanted to.
That's a good point. Those people are smart with
But you have to be savvy to do that because you don't
know how to use money. Yeah.
you don't want to take the money out and lose it.
Right. Getting money at 5%, which is kind of the max right now on a reverse mortgage. You can get reverse mortgages from 2.5% up to 5%, even 6%. Using that money in the market these days, but that's not in my knowledge. So I would never advise anybody what to do with their money.
No, that's gambling to a great extent.
And you know what? If you want to take that money and go to Las Vegas and have a blast, you can. You can do whatever you want. You don't have to explain what you want. Have at it. If that's what you want to do.
What are some of the myths about reverse mortgages?
I think the biggest myth, and the first thing I hear from people who haven't done the research yet, is that when I pass, they're going to take my house from me. That's the first thing I hear from somebody who has the first myth I hear. And actually, it's not true. It's just a loan like any loan. If you have a forward mortgage now, and when you pass or when you leave your house, you have to pay off that loan. So from the proceeds. Now, if the house goes upside down, and we went through 2008, 2009, when people were upside down on their mortgage, guess what? That's the bank's loss. That's not your loss. So if you leave the house permanently and you owe more than the house is worth, that's their loss.
Is there a certain amount of time that they have to sell the house?
I've been told it's about 12 months, but so the heirs would be in contact with the lender and let them know, yes, we've listed a house. Here it is, it's on the market. And they let them, go through the process and work with them. Okay. In our market, these houses are flying off the shelves, but you always want to anticipate any kind of changes in the market.
Would you describe the history of reverse mortgages?
I've been told the first reverse mortgage came about in 1961. Yeah. And it was from a savings and loan. Remember the old mom and pop savings and loan banks? Mm-hmm. Where you'd go in and you knew the banker and he knew you and he knew your family. Anyway, it was in Maine, I believe. And it was a widow and she needed help to stay in her home. And it was a gentleman, I can't remember his name, I can look it up, who extended the first reverse mortgage. And that was the beginning of an industry or a cycle. I don't see them going away anytime soon. We're fortunate where we live because in the rest of America, people don't have access to all this equity in their homes.
Yes, that's true.
They're just lucky to pay off their loan and not have to make mortgage payments. But another thing to know, again, in our market, because they have so much equity, is I have clients who, or we have clients that come back to us 3 and 5 years at a time and take more equity out, just take more cash out because their houses are just, appreciating so highly. That's something to know that you don't have to have your first reverse mortgage and just stick with it the rest of your lives. Or maybe the interest rates go down and you want to preserve your equity. I usually do an annual mortgage checkup with my clients. If they like, I give them a call and say, do you want to just review and see what's going on? And those two things are you can preserve your equity and or you can take more cash out.
Well, let's take another break here.
Okay,
and we'll be back. We'll be back with you in just a minute.
Has this happened to you? Use the Dutch reach. Turn your body to the left. reach with your opposite hand. Look over your shoulder. When it's clear, open the door. The Dutch reach, keeping bike riders safe.
So good to see you. I'm glad you're able to come over.
I heard you got a bike for Christmas.
I did.
That's
what did
awesome.
you get?
I got a nice hat and a beautiful scarf.
Oh, that's wonderful.
Do you know that guy?
No, that person looks really suspicious.
Aren't they out of town?
They are. We should call the police.
We're Neighborhood Watch, and that's what we do.
Welcome back to Senior Moments. I'm Dolly Simonovich, sitting here discussing reverse mortgages with Dominique Stevens, an expert in this subject. And it's been very interesting as far as I'm concerned. But Dominique, I understand there's different types of reverse mortgages. Would you go over that with me, please?
Absolutely. So there is the fundamental reverse mortgage, which was kind of the bellwether and the bulk of reverse mortgages for the longest time. It's called a HECM loan, HECM, and that stands for Home Equity Conversion Mortgage.
Mhm.
And it's underwritten by the FHA, the federal government. That loan is very popular in America. It's underwritten to FHA guidelines. It requires mortgage insurance be paid every month into a big pool. It's a huge pool, FHA loans. So if there's ever any defaults, those defaults are paid for with that pool of money, but it's definitely a requirement to getting an FHA loan. However, they only go to a certain balance height, which is, I'll have to check for you, but it's more around like 500,000, but I'll have to get the exact details. In the Bay Area, people often owe more than 500,000 on their mortgages in their 60s, 70s, even 80s, because they have been using their house as a little bit of a cash machine to take money out for living expenses. So the second type of reverse mortgage is a jumbo reverse mortgage, excuse me. And there are several lenders that carry those, and those are portfolio loans. They also have very strict guidelines that they have to underwrite to. They do not include a mortgage insurance premium. That's the FHA loan. But the jumbos go up to 3 million. So that gives our borrowers in the Bay Area a lot more flexibility and availability to assets to draw on.
What is the process of getting a reverse mortgage? Call you first, huh?
Call me first. We go over all the details and I can determine if the caller is eligible or not. And then at that point, we have software that puts the client's information into the software, their name, their address, how much they owe, their dates of birth, and then puts it out to the various lenders that we work with. And it comes back with opportunities and loan programs available.
Mm-hmm.
And then we talk to them about it and we send out a proposal. The next step is they're required to have HUD counseling by a third-party HUD counselor. And we have the list of counselors that we provide in the package. And they call and they do a phone counseling session where the counselor goes over all the information with the borrowers. That protects the borrower to make sure that they understand and they ask any questions maybe they didn't ask me or they forgot to ask. It also protects the lender because you have to have that certificate that makes sure that the people are of sound mind or they're not being coerced and that they understand what this is all about.
Do they pay for that?
Yes, it's usually about $125.
Mm-hmm.
And then some of the counseling companies have grants. So for people who are struggling financially, I tell them, just mention, I'm having difficulty, and often they'll waive the fee. So once that's completed on the phone with the counseling service, the borrowers send that to me. So I have the proposal, I have the counseling certificate, and then I'm allowed to provide them with an application. And we go over that together, and they sign the application, and that gets the ball rolling. And then, we start the process, and basically, what's going to determine how much cash back they get is the appraisal. What does the appraisal come in at? People have an idea from looking at Zillow or, or Redfin or whatever, what their house is worth. But really the appraisal determines the value.
So you don't just do comparables or comparables in the area. They actually have to come into your house and do a step-by-step appraisal of the house.
Yeah, the lender needs that. Yeah.
And then I think the homeowner pays for that too, right?
Yes, the homeowner pays for that. And in the Bay Area, they're going anywhere from $500 to $750.
How about with condominiums?
You could do condominium with a reverse mortgage, but you can't do a co-op. But there's very few co-ops here. I've only come across 2 in the city.
Uh-huh.
But condominiums are eligible.
If they don't call you, how do they find someone who does reverse mortgages? Can they just go to their local bank and find someone who does it? Or would you recommend that they talk to somebody who specializes in it?
The big banks got out of the reverse mortgage world during the crash in 2008. Wells Fargo used to do them. Bank of America used to do them, but they no longer do them.
How about Chase?
Huh?
How about Chase? Major? No, they don't.
So you can either you can Google and get a list of the reverse mortgage lenders and apply directly, or you can do what we're a brokerage, and you can call us, and we have many different reverse mortgage lenders that we work with. You don't pay us for our time. We get paid by the lender when the loan closes. So you don't have to shop your package around yourself and deal with.
You shop it for us.
Exactly. Yeah. And you don't have to deal with these folks in a call center who are, you've never owned a home and don't know California. And,
right.
It's kind of,
right.
Yeah. The first thing I usually hear from clients who haven't done a reverse mortgage yet, they're like, so I see advertisements that the interest rates are 3% right now, or 2.5%. Why is a reverse mortgage at 3.5% or 4% or 5%? And the answer to that is that the reverse mortgage lender has to borrow the money to pay off your Chase loan or Citi. I keep saying Chase, sorry. Whoever you have your loan with. So they have to borrow money from the open market, and they have to pay off your $500,000 loan, for example. And then they have to make those payments every month on that money that they borrowed. But however, they're not receiving the income from the borrower. Could be 30 years. Mm-hmm. So that is the difference in the interest rate. That's how they make their money, is when when the house is sold or the loan gets paid back, they get paid back for their time and money that they've put towards that effort towards your loan.
How about if the borrower decides they'd like to really amortize it and pay the loan every month?
They can totally do that.
Does that affect their interest rate?
No, once the interest rate is locked, that's it for the life of the loan. However, the borrower can turn around and in 3 years or 2 years refinance their reverse mortgage. Mm-hmm. They could get more cash out. If the rates are lower, they can lower their interest rate. So it's not just like you said, a one and done, getting a reverse mortgage. It's a very vibrant market. And
but then the fees take place again though.
Correct. Yep. You have to have an appraisal done.
Yes.
You have to pay the title and escrow fees. We just had some clients out in Stinson. I mean, they refinanced their property and their house went up to like 2.8 million, a tiny little, modest.
Yes.
But, good for them, it's a good market. It's a very vibrant market. And they're quite happy and they can relax and enjoy their lives.
What if the interest rates go up?
You're locked. Your interest rate is locked.
So it's not a variable rate.
There are variable programs as well. Sorry about that. There are variable programs.
Okay, but once you start with a fixed rate, it stays the same.
Correct. And the variable loan programs don't vary as much as like on the forward market because they have to protect seniors. So actually, my clients have recently had the rates go down because they're on a variable and the rates were in a downward market.
Mhm.
So, you know, they're happy as little clams.
Dominique, seniors right now, and I assume other than seniors, are inundated with scams on television and scams on their cell phones and their regular phones with phone calls. It's terrible. And I think many of them are afraid to call and even find out information for fear that they're talking to a scammer. How can they be assured? And is this a high pressure sales? How do you deal with that?
And I don't blame people. We all get telemarketing calls all day long. The credit reporting bureaus sell information about people. So I write for the San Francisco Chronicle on mortgages, and I write on reverse mortgages. We don't call out to people. They call us, they find us because of the information. And I've been doing this for quite a while. I'm not a high pressure salesperson. For me, if I can help someone and it puts them in a better place, then I'm here 100% for them. But, you know, and I'll give them all the information that they could need. And, you know, I'll be with them every step of the way, but there is no high pressure here. And I want everybody to feel comfortable and to be comfortable in their senior years. That's what it's all about for me.
Is there anything people should watch for?
I think the federal government has enough legislation in place to protect every consumer. We have to go through certain steps that provide a legal environment. So every lender has to do that as well. However, if you feel uncomfortable talking to somebody, they're pressuring you, then that's probably not the person for you, and listen to your gut. That's all I have to say.
Well, Dominique, I've enjoyed talking to you today. I think I've learned a lot, and I hope our audience has too. So thank you very much for your insight into reverse mortgages. And it's changed my opinion a lot about them. And I'm not afraid of them. And I don't think other people should be afraid of them, but they got to do their homework on it. And even discuss it with their children. And I'm sure that you'd be happy to discuss it with people and their family, and, you know, to make sure that the product is good for them. So thank you so much for your help today.
Thank you so much. Thank you for having me. I really appreciate it.
And thank you for joining us today on Senior Moments. We'll see you next time. Bye now.